Thanks everyone for joining us for our second session of our Fire Relief Fundraiser. We've got 6 great companies that have made a donation to either one of our suggested charities or a charity of their choice supporting fire relief victims. So next up, we have Tim Johnson, CEO of Granite Creek Copper, which trades on the venture under the ticker GCX and on the OTCQB under GCXXF. Hopefully, Tim's able to turn on his camera. There he is. And I'd also like to take the opportunity to introduce my colleague Magda, who's going to help me out with the rest of the session because I actually have to head to the airport to catch a flight. Hi, Tim. Nice to meet you.
Thank you. Nice to meet you as well.
Yeah, looking forward to hearing about Granite Creek Copper. And for anyone that's just joining the session now, just a reminder that this presentation will contain forward-looking statements. You can find them on the company's presentation on the website, and there will be Q&A, so feel free to input any questions you have at the bottom there. With that mouthful out of the way, Tim, looking forward to hearing the story. Magda's going to help me with some of the Q&A, but it'd be great to start with a bit of an overview.
Sure. Well, let's see if I can remember how to share. It's been a while. So overview of Granite Creek. I think as Michael probably mentioned, we're one of the members of the Metallic Group. We're focused in the copper space with our project, our flagship project, located central Yukon. Company is actually fairly new as far as junior companies go. We launched the company in January of 2019. We moved very quickly, but I can get in a little bit more into the presentation and we can walk through some of the details. Yes, I will be making forward-looking statements in the presentation, as I'm sure some of my colleagues have already made, and I encourage everybody listening to this to do your own due diligence. The presentation is available on the website for you to review. And of course, you can get a hold of the company at any time to ask questions about what was presented today or other things that we may have missed. Again, I think Mike probably went over the Metallic Group and our structure, so I won't go into a lot of detail here other than to say we've had a similar strategy to the other 2 companies in the group, and that was to acquire large brownfields land packages at the bottom of the metal cycle using modern exploration techniques to advance those, creating shareholder value. We are located in central Yukon. Yukon is a great jurisdiction to be working in. We've seen continuing support from Yukon government, from local communities, including First Nations, and we've seen continuing investment by some of the majors in the territory, including Rio Tinto, investment in Casino, Western Copper, and that project is literally just past ours down the road. And of course, we saw Hecla make a major investment into the Yukon in their acquisition of Alexco and that project just up the road from us. So excellent jurisdiction to work in, and we're very happy to be there. Well, we're talking about our Carmacks project today. In January of this year, we released our preliminary economic assessment on the project, valuing the project at over $320 million. We did a couple different scenarios on it. We'll get to that in a subsequent slide. But the project, infrastructure-wise, is well located. We were within 20 kilometers of hydropower on the grid. Of course, the Yukon government is currently working on upgrading the capacity of that grid, and we expect to see that moving forward. We have, on a copper equivalent basis, over 850 million pounds contained metal. Quite good grade for our project, just over % copper equivalent, consisting of 0.81% copper, 0.31 grams gold, and 3.4 grams silver. We've got a lot of room to be able to continue to grow that resource. And the last bullet on this slide is that there was a former producing mine in the district at Minto, which is about 40 to 50 kilometers, depending on where you start from, north of us, in the same geological setting. But back to a little bit more about our project. So after starting in January 2019, we did a major consolidation of the southern portion of an area known as the Minto Copper Belt. We have over 177 square kilometers of highly prospective ground, and our resource is contained in a very small portion of our current land package. So the Carmacks deposit is contained in the oval on this image that is in the bottom of our land package, but there's multiple zones that we feel we could add resources over time and extend any potential mine life. A lot of these target areas have been known since the 60s and 70s. But there's been really little drilling outside of what we call the Carmacks deposit. Some of these areas were identified by geochemistry, geophysics, and some but limited previous drilling. PEA on the project, just a little bit more detail on that. Like I said before, we ran 2 pricing cases. We ran a 375 copper with 1,800 gold, and we ran a 425 copper and a $2,000 gold. Again, a very robust economics on it. We looked at initially a 5% discount, but we've also in our tables in the PEA, which is available on our website, we contemplated a 10% discount as well, just to show that the project was still fairly robust, and even at a 10% discount was cash flow positive. Initial 9-year mine life at a 7,000 ton per day mill with very short payback of 2 years or less, depending on the pricing case. And a modest capex, $220 million with a life of mine sustaining capital of 120. But we see additional opportunities to expand not only the net present value of the project, but also mine life. One of the things that one of the challenges with the deposit is that it's a mixed oxide sulfide copper deposit. Previous operators had really focused on the oxide material, and they had tried to put together a mine plan that would work on the oxide only. We felt in going to PEA that we needed to include both oxide and sulfide mineralization in order to get actually an increased throughput over a previous study, as well as a longer mine life. But in doing that, we had to choose a processing method that would work for both types. So we've chosen simple, off-the-shelf, well-understood flotation technology, with the understanding that we wouldn't be getting as good recovery in the oxide as we were in the sulfide. But we are now looking at ways to improve the copper recovery in oxide through additional metallurgical work. That work is ongoing, and we've identified over 180 million pre-tax net present value should that work be successful. We have multiple near mine targets that we believe we can add significantly to the resource, and that work is in the planning stage. And of course, as I mentioned before, we have our north target area where we've got multiple targets that have seen very, very little work since actually the 1980s was the last significant work done there. So just a little bit more about that metallurgical opportunity that we see. As you can see in this table, when we're processing sulfide material, we're projecting over 93% recovery of the copper, but only 39% when processing the oxide. So again, we are working on increasing that oxide recovery through some novel processes, but not unknown process. So we're using a post-processing leach and precipitation of copper. The technology is understood. We're just applying it in a different way to this deposit. And looking at some of the sensitivities on the end on the PEA, the big one is copper price and recovery. So we see a 20% increase in copper price moves the value of the project significantly, and the same thing on a 20% increase in recovery. So there's nothing we can do about the copper price, but we can definitely work on recovery. And when the next stage of study, we will also look at improving the capex and the opex of the operation for incremental increases as well. Our mineral resource, as mentioned, this is a copper oxide and a copper sulfide operation or deposit. And currently the resource is split roughly 50-50 oxide and sulfide. And it's that split that really sort of indicated to us that we needed to look at a process that would address both types of mineralization. Our resources are roughly 95% of them report to 3 conceptual open pits. So this would be an open pit operation, which is significantly lower mining costs than underground. We're projecting around $3.70 to $4 per ton mined, and then processing on top of that. But the fact that the resources are open pittable is a huge bonus for the project. And then our exploration upside. So we have done some significant induced polarity or geophysical surveys and geochemical surveys in and around the proposed pits to try to find potential new resources. We got multiple target areas that we believe could significantly add to the resource, and these are undrill tested. So lots of upside for the project, and we hope to get back on the ground soon to be able to drill test some of these. Once we had a PEA, it was much easier for us to make comparisons to some of our peers. So what we've produced is a table that shows the net present value of the asset compared to the market cap. And you can see we've got a lot of room to be able to grow that. So even a modest increase to move us into where some of our peers would be in that ratio would add significantly to our bottom line as far as the market cap is consistent, and of course share price. So we look forward to continuing to work and the market's turning so that we can get back into that middle of the pack. And then aspirationally, we think we can be somewhere, where in Arizona, Sonora, Forand is, just based on our resource size and the development potential that we see. So, of course, there is, I would be amiss not to bring up the formerly producing Minto mine. This was a 4,200 ton per day operation, but for the past 2 years, it only been running about 3,000 tons. But it's a very interesting model for the district. It was producing quite a high grade concentrate, well over 40%, that was in demand. And we think that the district still has a lot of potential to be able to produce a lot of copper. If you look at the mined copper at Minto plus the publicly disclosed resources that Minto had, and you add ours, you start to get to over around a 2 billion pound district with lots of upside potential to be able to add to that. So what we see here on this slide is that the Minto land positions in purple, Granite Creek's land position in orange, and then First Nations land positions surrounding the Minto mine and in and around our project as well. There's really 3 tenure holders in the district, which I believe could be a world-class copper producing district. 2 other projects in the company I'll touch briefly on. A Molybdenum Project located central BC. The LS project has a historical resource on it. We are earning in on this, and we are looking for a joint venture partner in the moly space. And then a very early stage copper, nickel, platinum group metal project located again, central British Columbia, that we own 100%, and early stage, but very prospective, not only for copper, nickel, and PGMs, but also for carbon sequestration potential as well. The geology would support direct sequestration of carbon, and that's something that we're interested in looking at as well. So again, just to summarize, the company launched in January 2019, but moved very rapidly. We've gone from really a greenfields copper play to a resource stage company. We one drill campaign, we grew that resource by over 43% contained metal. We engaged SGS for a preliminary economic assessment. delivered that preliminary outcome that PEA in January of this year, and now we're focused on ways that we can increase the value of that PEA, either through additional metallurgical work or resource expansion through drilling. A little bit about the copper market itself. We see continuing supply demand and some pressure on the supply side. We see a lot of the over 30% of the annual production of copper comes from South America, from Chile and Peru, and we see some of those mines being very long in the tooth and potential disruptions from those countries as they go through some geopolitical risks. So we think the copper space is an excellent place to be, and as we transition from a fossil fuel economy to an electric economy, where everything is being electrified, whether it's data storage, transportation, or energy storage, all of those are huge demands for copper. So we think the copper space is an excellent place to be. I encourage all investors to have some of copper in their portfolio, even if it isn't Granite Creek, but we think we're a good opportunity. Where we are in the development cycle, so this is a variation on the Lassonde curve. We are at the PEA stage where we are advancing the project with the first economic studies. And we think this is an excellent point for entry for investors. But again, I encourage everybody to do their own due diligence. A little bit on our team. So we've assembled a strong team with great connections to the metallic group. Our exploration team, we borrow or lend some of our members to other companies in the group, allowing us to keep good people within the group by giving them lots of opportunities, work on various deposit type studies models. And one of the advantages of the group is that we're able to afford specialists in their field that a single junior wouldn't necessarily be able to afford. So we've got within our group people who are focused on geochemistry, geophysics, 3D modeling. That helps all the companies in the group. So it's an excellent group to be a part of. And then the track record within the group of value creation. Greg Johnson, chair of the group, of course, was one of the founders of Nova Gold. And in the early 2000s, we saw Nova take modest resources at Dolan, Galore, and Ambler and turn them into world-class assets. So we think we're on a similar track within a metallic group of companies. 4 significant projects within the company, all of them with formal resources or near-term formal resources, and now starting on the economic studies to advance those projects towards a production decision. Yes, as Mike mentioned, we've been following the market as well to what we hope are our bottom lows, and we think it's only up from here. And as we have success in developing the Carmacks project, we're keen to have investors join us and come along as we advance a project and create value. So that is project and myself summarized, and happy to take any questions that we might have.
Thank you, Tim, for the update. That was really good overview. First question would be about the history of the Carmacks project. Since you acquired it, there's already a PEA and a resource on it. Was it previously producing? What stage was it at when you acquired it? A little bit of history, if you can.
Yeah, so we acquired it by way of merger with a company called Copper North, and Copper North was spun out of Western Copper in around 2005 or 6, I believe. So the project's never been in production. Project's gone to feasibility on the oxide portion of the project only. And then the last PEA prior to us taking over was again on the oxide portion of the project. When we took it over, we looked at the data. We felt that the mine life was too short and that the throughput was too small. It was right on the margins of being economic. I think post-tax, the PEA completed in 2017 was actually underwater. We felt by including both the oxide and sulfide ore and increasing the throughput that we can improve on the economics, and we've done. So we're well over 300 million, depending on the discount that you use, and we feel that that's the best way to include all ore, whether it's oxide or sulfide. And we've simplified the flow sheet from what was there before to a simplified, less risky process.
Got it. Thank you. And you've had a PEA out earlier this year. What are kind of the next big milestones for the asset? You mentioned exploration, you mentioned metallurgical testing. Do you have kind of like a time frame for these?
Yeah, so the metallurgical work is underway, and we've released some preliminary results for it. It looks quite good. So basically what we're doing is we're taking the tailings as they're coming out of the mill, are proposed coming out of the mill, when we have a lot of oxide, and we're treating those tailings to recover more copper. So the deposit or the economics do not depend on this. This is an improvement in the economics that we're trying to achieve. Carmacks Research is doing the work for us, and they're a well-known research lab in Vancouver, whose clients include Glencore and Teck and all the big copper producers. So this is something that is not new to them. This is a technology that I've been told from the metallurgist doing the work for us that is proven. It's just where in the flow sheet that it's used is somewhat novel for us. So that work, I expect that in the coming weeks to get the final results from that. It could be significant enough that we may consider redoing the PEA, depending on how it lands and what the markets are looking like. We won't be drilling this season, but we are gearing up and doing planning exercises on some of these some of the targets for a drill campaign for next year.
Got it. Thank you. And so you wouldn't necessarily be changing the size, more just the flow sheet itself, compared to what we did in there.
The success of the metallurgy work is going to do a couple things for us. It's going to increase the value, and it may actually extend mine life, because some of the materials that we weren't getting high enough recovery on didn't make it into the mine plan. So if you increase the recovery, then we could potentially add to mine life as well. We see the 9-year mine life is a little short. I think it should be closer to 15 plus years before you'd make a production decision. So we're looking at the ways that we can achieve that through either exploration or, like I said, improve recovery. So some of the resources that are currently sitting just outside the mine plan could be brought into view.
Got it. Thank you. And kind of switching gears a little bit, you mentioned a molybdenum project that the company acquired. I believe it was this year. Yes. Kind of what drove that decision, and any particular work planned for this year?
Yeah, it was somewhat serendipitous. It was brought to our attention just when moly prices were taking a run. It was held by prospectors who'd held it for a long time and were kind of looking, to move away from it. So we got it for a very reasonable price. We're issuing shares for the project over a 3-year period. One of the things that we are working with, working with local First Nations communities on a development plan for it, and that's going to be key to developing the project. We're doing a small prospecting program on it this year just to confirm some locations of previous drilling and mineralization. It's not key for us. We'd like to sort of develop it and look for a joint venture partner for it. But community engagement and finding a development path with local communities is going to be key, and that's part of the work that we're doing as well.
Got it. Thank you. And turning to corporate type questions, who are your major shareholders?
It's primarily retail shareholders. We don't have any current funds in the company. We're well supported by a collection of investors from the Yukon who have known the project for a long time. Several key investors, not over 10%, but several who have a very good stake in the company. We don't within the group. There's no common shareholdings from company to company. We have common shareholders, but for instance, Metallic doesn't own any Granite Creek or vice versa. So it's retail based and some high net worth U.S. investors, but yeah, no investors over 9.9%.
And since we have a couple of companies from the Metallic Group presenting, I'll ask you this question. Is there how does being part of the Metallic Group, or does it, do you kind of work on technical, exploration, geology issues together as they come up, or is it mostly separate?
No, I mean, if there's challenges or questions, we open it up to the group. We have, everybody's virtual though. Everybody works from all over the place. So, we've got geologists on projects who live in Vancouver, who live in the US, who, come from all over the place. I think one of the advantages that we have is that Granite Creek isn't doing a drill program this year. So the project geologists who would have been working on that are now working on the other projects. So it's not like they go away and then you have to come and find them again, right? So we kind of flex our crews between the projects that way. And having geologists, especially early in their careers, the opportunity to work on multiple different deposit types is really advantageous for them, as advantageous for us as well, because you bring that knowledge base and you get to have a different perspective on the project that if you've been the only only geologist on the project for a long period of time, you might not necessarily have that. So there's a lot of advantages to the group that way. And like I mentioned in my presentation, we have some specialists in the group that a single junior wouldn't necessarily be able to afford, right? So we're able to retain some people either on a retainer basis or be able to call them in on various projects, because we have enough work across the projects to keep people interested in that regard.
Awesome, thank you. And what funding corporate options would you consider to advance your assets?
Yeah, that's a very interesting question, because I mean, we think the project is too early to sell off a piece of the project, right? So we want to stay away from any property deal, unless of course it was great terms. There is very little in the way of royalties on the project, so we would consider a royalty deal to be able to advance the Carmacks project. But at this point, the stage that we're in, we're primarily looking at equity. But of course, you got to stay open. But that's our primary interest.
Got it. And I guess there's would you consider with corporate changes in the Minto area, there might be? Would you consider opening up strategic pathways?
Okay, you brought up the Minto thing, which is interesting. So if people have been following the story, Minto was placed in a care and maintenance by the Yukon government earlier on this year. And then it's been announced publicly that there is a receivership process underway. We are carefully following what's happening at Minto. We think we add a lot of value to the district, and whoever gains control of the Minto asset, we're interested in doing something with. That's about as much as I can say about that. But we think Minto is an opportunity, and we hope that somebody with the means to advance it is able to monopolize on that opportunity.
Got it. Thank you. And can you kind of just give us, to wrap up, the top news items to look for over the next couple of months from the company? Absolutely.
Well, I encourage investors to watch for our metallurgical results. We think that's going to be key and could be a game changer. It's almost a 50% increase in a net present value if we're successful. And then we'll be talking about we'll be in the coming weeks, we'll be doing a sort of an overview of all three major projects in the company and the company's plans moving forward. And I hope that investors find that interesting as well. And not necessarily us, but keep your eyes on what happens in the Minto district, because it could be a game changer for somebody who's able to control that asset.
Well, thank you so much for giving us the overview and all the answers. Thank you for participating in the fundraiser as well. And have a great weekend. It was nice meeting you, Tim.
Yeah, it's nice to meet you as well. Thank you.
All right.